I think there's been a little bit of complacency in the market through the first half of October. And you have to think about the bigger picture. We're heading into an election where obviously there's an expectation of a change in the White House. The market doesn't usually rally through that. So I think directionally, a sell-off here and a shakeout in the next 30 days, or at least until we know the outcome of the election, is reasonable. But I don't think that it's something that investors should really do much about. And I would expect, especially on a day like today, I think the sectors and the behavior that we're seeing in the sectors make sense. You're going to see the sectors with the biggest gains go first. So when there's selling pressure in the market, it's a lot easier to sell the stuff that you've made big gains in. So seeing technology and communications get hit a little harder today makes sense to me. I don't think that this is going to be a long-lasting issue, and I don't think that this is an indication that we're starting a new bear market or anything like that. But I do expect there to be a 5 to 10% shakeout in the near term here.
What level would suggest to you, Liz, that investors should do something about it immediately? What level of pullback, if it was just related to short-term technicals or the election, would be enough to warrant investors putting money to work straight away?
Usually you see the market start to react differently when you get into the double digits. So if you get above a 10% pullback, but I think it also would have to be coupled with a catalyst. So there would have to be something in the news. Maybe there's another issue with the fiscal package. Maybe there's vaccine issues. There would have to be a catalyst that made it worse than a 10% pullback, and then we'd have to worry about it being more long-lasting.
Shepard Smith here. Thanks for watching CNBC on YouTube.